Good morning, everyone. This is Srikanth Rajan, and welcome back to the Stock Market Podcast from mpiinvest.com. So, talking about the markets yesterday, the markets, of course, did see some consolidation. In fact, opened with a gap up, but from there, it had a steady fall. It had a small rise, but then a steady fall till the end of the day. And end of the day, before the markets closed, again market rallied up and actually closed in the positive for the 11th day probably. So the markets have been on a continuous bullish movement, and it is like just moving as if there is no stop. In fact, all these days it moved when last 10 days Europe and US markets were falling down continuously. Still, it went up, and now when European and US markets are getting ready to move up, what's happening? Well, yes, that's exactly what's happening. So if you see yesterday the FIs have actually bought and the DAs have sold slightly. But then in spite of all that, Nifty has actually closed in the green yesterday. And the best part was after Indian markets closed, the US markets opened in spite of the bad inflation data. Inflation went up. The PPI, that is producer price index, which is a wholesale price index kind of, which can kind of predict for the next month CPI, that also went up, which was bad news, and still the markets just went up. It is something like, people have kind of got used to this fear of inflation. In fact, people are saying everybody's talking about inflation going up and the rates going up, but everybody kind of has a feeling that Federal Reserve in the US have been continuously raising interest. At some point of time they will stop, and at least that stop is not very far away, and that's exactly why probably investors are just thronging into the markets. And the way markets are going up in spite of all these fears around is something like the market has kind of digested all these problems. They don't want to suffer, or they don't want to think about all these things anymore, and that's kind of fueling the market at this point of time. And the best part is, when US markets have rallied up so much, definitely we are expecting a big gap up in India today, but will it sustain is a question mark. That's something that needs to be addressed. Sorry for the technical issue. Okay, so if you look at the market right now, if you see Indian markets have actually rallied up too much, I agree. But then yesterday and this entire rally, if you see, has not been led by FIS, but just the Indian market. So if you see for the entire last month, FIs have actually not bought much. They've been only selling in small quantities, or not buying in very small quantities. So this rally was not brought by FIS. In fact, FIS had invested a few, I think 2 months back. That was when they did big buying. After that, they've not actually invested big. They have been just spectators. In fact, the way the markets are going up, there are two things that can happen. One, those investment that was done by FIS can get started to book profit. But will that happen now? I don't see a reason for that to happen, because the next and only uncertain thing that we look forward to is the elections. Now, once that is announced, probably then we might see some fall in the market or some profit booking in the market, because people want to be safe before the elections. But then, apart from that, if you see, there's no other reason why the FIs have to book profit from India. Second important thing, when the markets are being fueled, there should be reason. The fuel, what is being running it right now, is nothing but the retail participation, the amount of fund coming to mutual funds, and these funds are going majorly into small cap, mid cap, and that is why these sectors are actually going up higher. And not only that, with so much fund coming to mutual funds, they have to deploy it immediately, and that has to take the market upwards. And as people are seeing more profit in their portfolio, people are probably just increasing their investments. It is completely fine, and markets are bound to go up. But this bull rally is looking like it's a long term bull rally. In between, there might be corrections, but whatever it is, I am telling you, more than 30 to 40% of Indian population is yet to come into the market, and that has to fuel the market for sure. So this is going to be a longer term bull run is what I feel, and that is what is kind of keeping my investments in place. Simple as that. I don't want to kind of be away from market, so I want to stay invested. I have at all point of time invested my money. At any point of dip, I would actually think of adding more money only, nothing more. So that is the situation that I am seeing right now. So this bull market is here to stay. Yesterday, if you looked at the market, Yesterday there was a major bull run seen in metal stock. Hindalco was up by 3-4%. Tata Steel was up by 2%. So overall, metal stocks also have started driving up. In fact, today morning, the China has actually released their data of few economic data, which has actually come out very good. They say that things have started improving majorly because of improvement and where tourism coming there, people coming there for tourism, and also sales have started improving. So that's a great sign. But the only fear as of now in the China is basically the real estate sector. They have not really come out of the problems of the real estate sector. When is that going to put into trouble is the major thing to look at. The second concern that we should be looking at is the crude oil prices going up. So there is this artificial supply cut which is happening, which is done by Saudi and Russia purposely, basically taking the crude oil prices going up. So this is again a bad thing, not only for India but globally, because it's going to affect the entire market. Shipping rates can go up, naturally product rates can go up, overall inflation can go up. So that these are two factors which I see as a major negative, apart from a roadblock which is seen in Indian elections. So these three factors are things to be focused on. When are these things going to hit the head of the investor is something which nobody knows. But the day it hits hard, it can actually see a big fall. So that can be an opportunity to add more fund is what I would say, and I would just look at it that way. So that is something that is going to happen in probably a short term. Short term in the sense could be anything between 3 to 6 months. So that is something that can to be watched out for now. Apart from that, markets are looking super bullish and super good to be invested. But very importantly, if you are invested in fundamentally strong stocks, you really don't have to worry much. But if you are just taking a trend or a technical analysis and investing in a stock, trading it's fine, but investing in a stock with technical analysis, not a great thing to do, right? So that's something you should be careful about. Apart from that, things are looking good. Let us discuss more in details on the Market Pulse video on Sunday. That would discuss about what happened this week and what could be expected next week. So wishing you all a happy weekend. This is Srikanth Rajan signing off. But before we leave, do remember to press the like button if you love the content that we share. And do share the podcast with your friends and relatives to help them learn and invest together with us. Goodbye and have a great day.